Hello guys and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video we're going to be quickly looking at the crude oil markets as well as the gold chart. And before I start today's video, I just want to state that I myself and the rest of the Signal team do currently hold a buy position in crude oil and a sell position in the gold markets. So my bias here for crude oil is bullish. Let's start off here with the crude oil markets. I will share with you actually our entry and exit strategy here for the crude oil markets. We entered this trade down at around $69.50. That was a few weeks ago, back around here on the 3rd of December, and I'm happy to announce that we are about 50% of the way there to achieving our take profit all the way up at $85 a barrel. Don't get me wrong, there was a few occasions when we did come close to triggering our stop loss, but that's why I kept it rather low. I knew that the markets were going to be very volatile going into this year, going into the end of this year, especially with this new variant, but I'm very happy to see the way that the crude oil markets have reacted. And yesterday we had a key development. We've broken above that 50-day EMA. That was very important to do. And that to me tells me that we will go and target $80 a barrel. And, even better, we've just cleared this 0.61% fib level. So that opens the doors up towards $80. And I would be very shocked if we didn't go and achieve $80 a barrel going into the end of this week. You're probably watching this video thinking, well, fantastic. Max has just shared that, the fact that he's targeting $85. Well, don't go and buy crude oil here because it could easily pull back down towards a 200-day EMA, and it doesn't give you a very good risk-reward ratio. The key is to get in on these low levels here. Buy into the fear. Many people would have not been buying crude oil, especially when there was news of a new variant. Well, guess what? I was, my Signal team was, and now we're seeking the benefits of taking such a position. So, for a very small fee of $19.99, I definitely would recommend becoming part of our streaming service, which will then, of course, give you access to our private Telegram Signal chat. I just want to mention that we have had a 100% win rate over the past 3 weeks. And, of course, I will leave a short clip at the end of this video explaining how you can become part of that team. But crude oil here looking very positive indeed. Going up towards $80 a barrel before the end of the week, I think, is a great target. And if we break above 80, which, of course, is that 0.786 fib level, that could truly send us up towards our take profit towards $85 a barrel. I don't really think it's a matter of if, I think it's a matter of when. That's my personal opinion here for the crude oil markets, but very bullish indeed. Gold, on the other hand, I'm not going to share with you my entry and exit strategy for the gold markets. You will have to go over to our streaming service and become a member, where, of course, I've been posting videos explaining my strategy with regards to gold. But as I did mention at the start of today's video, I am currently bearish. I do not like the gold markets. I think it's got a lot of work here. If it was to go and target 1877 and eventually at 1920, the positive is that we are breaking for the second time above this downtrend. But what I'm looking for here for the gold markets is a really big rejection candlestick, and it may be that we have to wait for some news to be a catalyst of that. But we've had some positive news over the past couple of days, and that is that firstly, this variant is 70% less likely to put you into hospital than the Delta variant, which of course is very bullish for the US economy, hence bearish for gold. And as well as that, we've also just had the US come out today and say that the quarantine time has been slashed from 10 days down to 5. Now, this is going to help the US economy grow massively. This is fantastic news, and I really do anticipate the Fed to come out and, of course, to taper, to accelerate that tapering process, and we will see that interest rate hike going into March. There was big questions whether we would actually see it or not due to this brand new variant, but I think that hits a nail on the head for me, and that we will in fact see that interest rate hike into March. So I am bearish here for the gold markets. I think it's only a matter of time until we do see that big red candlestick, which will send us down towards 1772. And if we can break below there, I think that sends us down towards the swing lows down at 1725, and then eventually 1700 down to 1680. So if you would like to see my current trade that I have open, as well as my other Signal team members, then please do head over to our streaming service and sign up. And of course, I've got a full video where I cover my strategy with regards to the gold market. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have 2 subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.